In a significant shift in the global economic landscape, the United States has overtaken China as Germany's top trading partner. This development signals a potential realignment of economic power, driven by a confluence of factors ranging from US economic dynamism to Germany's strategic decoupling from China. The implications of this shift are far-reaching, impacting not just transatlantic trade relations, but also the broader geopolitical balance. For years, China held the mantle of Germany's largest trading partner, symbolizing the Asian giant's economic ascendancy. This relationship was mutually beneficial, with German manufacturers finding a voracious market for their products in China, while China gained access to advanced German technology. However, several factors have contributed to a gradual decoupling between the two economies in recent years. The United States, on the other hand, has experienced robust economic growth, fueled by strong consumer demand and a resurgence in manufacturing. This has made the US a more attractive market for German exports, particularly in sectors like automobiles, machinery, and chemicals. Moreover, the Biden administration's focus on strengthening transatlantic ties and promoting free trade has further bolstered economic ties between the US and Germany. The implications of this shift extend beyond economics. Geopolitically, it signifies a potential realignment of alliances, with Germany seemingly gravitating closer to the US amidst growing concerns about China's assertiveness on the global stage. This shift could have profound implications for the future of global trade and diplomacy. The American economy has rebounded strongly from the COVID-19 pandemic, driven by robust consumer spending and government stimulus measures. This has led to increased demand for goods and services, including those from Germany. The US economy is projected to continue its growth trajectory in the coming years, albeit at a more moderate pace, further solidifying its position as a crucial market for German exporters. In contrast, China's economy has shown signs of slowing down in recent years. This is due to a confluence of factors, including the government's efforts to transition from an export-driven growth model to one based on domestic consumption, the ongoing trade war with the US, and the lingering effects of the pandemic. While China remains a significant economic power, its growth trajectory is likely to be more moderate than in the past. Germany, heavily reliant on exports, has been impacted by the slowdown in the Chinese economy. Chinese demand for German cars and machinery has weakened, prompting German businesses to diversify their markets. The US, with its strong economic fundamentals, presents a natural alternative for German exports. Furthermore, the Biden administration's policies, including investments in infrastructure and clean energy, are expected to create new opportunities for German businesses. The US is also a major investor in research and development, making it an attractive partner for German companies seeking to collaborate on innovation. Germany's decision to reduce its economic dependence on China is not solely driven by economic factors. Concerns about China's human rights record, its increasingly assertive foreign policy, and the risks associated with its opaque political system have also played a role. The German government has adopted a policy of de-risking from China, which involves diversifying its economic partnerships and reducing its reliance on Chinese supply chains. The US, with its democratic values and commitment to the rule of law, is seen as a more reliable partner for Germany. The Biden administration has made it clear that it intends to work closely with its European allies to address the challenges posed by China's rise. This has resonated with Germany, which is increasingly wary of China's growing influence. Moreover, Germany is part of the European Union, which has been strengthening its own economic ties with the US. The EU and the US are currently negotiating a free trade agreement, which, if successful, could further boost transatlantic trade and investment. This would create new opportunities for German businesses and solidify the US's position as Germany's top trading partner. The shift away from China is not without its challenges for Germany. China remains a major market for German exports, and decoupling from its economy could have short-term economic costs. However, the German government appears to have calculated that the long-term benefits of reducing its dependence on China outweigh the risks. The rise of the US as Germany's top trading partner has significant geopolitical implications. It suggests a potential realignment of global trade patterns, with the US and its allies forming a more cohesive economic bloc. This could lead to a more fragmented global trading system, with distinct blocks centered around the US and China. The shift also has implications for the balance of power between the US and China. The US is likely to leverage its strengthened economic ties with Germany and other European allies to counter China's growing influence. This could manifest in closer coordination on issues such as trade, technology, and security. For its part, China is likely to view this development with concern. The loss of Germany as its top trading partner is a symbolic blow, highlighting the challenges it faces in maintaining its economic dominance. China is likely to respond by strengthening its ties with other countries, particularly in Asia and Africa. The implications of this shift are still unfolding. While the US economy is currently robust, maintaining this momentum will be crucial for sustaining its position as Germany's top trading partner. Factors like inflation, potential recessions, and trade tensions with other nations could impact US economic performance, potentially affecting trade relations with Germany. To mitigate these risks, the US needs to maintain fiscal discipline, invest in infrastructure and education, and promote innovation. Fostering a predictable and business-friendly environment will also be crucial for attracting foreign investment, including from Germany. The US must also navigate the complexities of strengthening transatlantic trade relations while addressing concerns about protectionism. Striking a balance between protecting domestic industries and promoting free trade will be essential. Despite these challenges, the US is well positioned to capitalize on the opportunities presented by this economic shift. The US surpassing China as Germany's top trading partner marks a potential turning point in global economic relations. This shift underscores the resilience of the American economy and the evolving dynamics between major global players. It also highlights the significance of transatlantic trade relations in shaping the future of the global economy. Moving forward, both the US and Germany have a vested interest in nurturing this burgeoning economic partnership. For the US, it presents an opportunity to strengthen alliances, counterbalance China's influence, and promote its economic interests. For Germany, it offers a chance to diversify its economic partnerships, reduce its reliance on China, and align itself with a like-minded democratic power. The success of this partnership will depend on several factors, including the ability of both countries to maintain economic growth, manage geopolitical tensions, and navigate the complexities of global trade. However, the potential benefits of a stronger transatlantic economic alliance are significant, promising a more prosperous and secure future for both the US and Germany.